Alright, hello everybody. My name is Scott Berthel. Um, just wanted to, here's my email address in case anybody wants to get in contact with me. And there's my Twitter handle that I'll be posting any of my trades via Twitter account right there. And this is my disclaimer for educational purposes only. So thank you for that. This is what hypothetical trading account. This is what I'm going to be. We're starting off with $25,000 so that we can get in and out of day trades anytime we want. So this is a hypothetical account. We're starting off with 25,000. Today is Sunday, February 14th, 2016. And let's talk about the three videos that I've done so far. I did a video on the Euro US dollar on 129, and I said that based on our trend lines and our Bollinger Bands, that we're going to respect the trend line, and that we're going to think of it coming back down to test the 108, high 107 area. It did that, and we said we were looking that this was a squeeze, a volatility squeeze, meaning that the price just kind of came on down and there's not a whole lot of up and down movement. So we're looking for it to bust. This is coiling up like a coiled spring, and we're looking for it to bust one way or the other, and it did. It busted out up, and we got a heck of a major move there. So now what? Well, after a move like this, oftentimes we will see, I'll go to this hourly in a second, but so this is here's our trend line. We love trend lines. So we'll go from this low to this low. So that's where we are. So we're going to keep that intact. And it busted out of that. So what I'd like to show you is, let's go to weekly real quick. All right, here's our weekly. Now we have some major resistance here at $1.15, and that's where we're thinking that this is going to go to. It's going to get up to here, and then it even has a chance to get up to here to 117.60. But it's going to take a little bit of time. Just like this one busted from, or went from, what's this, 105 up to here, the blue line, to 110. Then we're looking for 110 to 115. In the same amount of time, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. 1, 2, so we're starting the third week. And I think it'll drift up here, and you'll have chances to trade based on this. This is the hourly, and this right here is Andrew's pitchfork. All it is you go from the high down to the low, and then to the next high, which is right up here, and then then it'll draw the lines for you. And what this does is it just gives you a trading range, though it is upsloped, to watch. And what did it do? It came down, tested the lower band, it went back up, tested the higher band, and it went back down, tested the lower band. Now, so what can we do with this information? Well, I'm looking to buy in the morning time. I'm looking to buy right down in here for it to go back in and heading back up. So that's what we're going to look for tomorrow morning, is to buy the euro, and we're thinking it's going to go up here. Now, what if it doesn't? If it comes down? If it comes down, then it'll test this low at 111.58, and then if it keeps on going, it'll go down to 110, and then we have our base at 110 again. it might do that. It might give you a down a chance to buy it lower down here. If it does, then I'd have to get out, but then probably buy it again down here. But for right now, we're gonna use our Andrews pitchfork, and we're gonna watch it today, and then again we'll look to buy it. All right, so that was the call on the euro US dollar, and so that worked out pretty well for us for what we were thinking. The next thing we talked about on a different video is oil. So let's take a look at oil and see what we got going on here. Let's see. Let's do this. And we'll come on down and we'll look at this. All right. So here we are with oil. And I got my lines all over the place. But here we are with oil. Okay. Last time I talked about oil, the Bollinger Bands coming in and looking for, I didn't know, I said it was 60-40, 50-50, what it was going to do, if it was going to go back up here or come down. We did say, we respect our trend lines here. And so we said, 60-40, it'll go down. Well, it did. It came back down. Didn't go very far, but got down to there. And then it again came back up and it went down. So our timing shows from this low to this low, and then here to here. So we expected another low in this area here. Or I said that it could, if it busted out up top, then this would be the high. So it's basically a cycle. Did it came up, and was it going to, keep going up, or was it going to go down? And then so we're at the end of the cycle again. In this area here, based on this low to this low, we just projected it from here, saying that okay, our next low is going to be around here, and it worked so far. And it lowered the next day, and it's heading back up. So what do we expect now? Well, what I'm thinking of is that it's going to try to get back up to this trend line. But its first obstacle is going to be the blue line of this blue line here, the Bollinger Band, at 30.56. So that's going to be resistance at 30.56, but it can get back up to the trend line. But oil's in a downtrend, and we think it'll keep going down. However, for this week, it does have a chance to be just a counter trend rally off the low. Last time it went from $27.75 up to $35. That's $7.50. So if we did $7.50 on top of there, then we can get back up to 33. What's that? 33.64. 33.64, which will be right up in this area, which is actually the top of there. So for right now, we're just thinking it's gonna keep on trending down, keep on trending down. That's what we think. Now, is there a trade that I would take right now? Is basically what people are probably wondering. And the answer to that is no. It's right in the middle of the range, up here or down here. So I wouldn't take a trade right now. I wouldn't take this because it can go either way. The Ellers, they're looking like they can turn up, but let's look on a weekly. So on the weekly, our last week is this hammer. It's called a candlestick. It's called a hammer. So I wouldn't be surprised again, if this week is just in this range, I think we're still range bound. So I wouldn't, however, the volume is very big. So this is called hammering out a bottom. And right now, I just don't have anything on oil. I can't, it's not setting up any technical thing that I recognize. So I don't want to tell you to get short here because it can do a number, that, and it can go right back up here. So all I can say is I'm going to look to short up here, and that's it. This is a flag pattern starting right now, so it could definitely, it still has, built itself a base here. It has here's the pole, here's the flag or the pennant. It can do another move from, another $1.50 move on top of that. So at the moment, there's nothing that I see in oil that I would want to do. So let's take a look at Apple. That was the other video that I did. Let's see what it says. Now, on Apple, we were saying that it's been bouncing along the lows since January 7th or early January. It's just been sitting in this trading range. This is what we talked about before, and we said we had to respect this trend line, which started on 12/7/15, so December 7th, 15. Okay, and it hit there, and then it come on down. Now these trend lines are. People ask why. Why do you draw it one way and not another way? This is not a perfect science, as you can tell from this. If we drew it from this high, then it would be this trend line, and we're like, oh, well, it broke out of this trend line here, and it broke out here. It's not an exact science. A lot of times there are, it's just, a little bit further. Sometimes you got to push things a little bit further out. So this is our trend line, the purple one right there. And it stayed underneath it. So again, the volatility is really it's come in, and it's just sitting here. It's just sitting here, not doing anything. But what's it going to do? Well, as far as I can tell, it has a chance to pop up, but we got major timing. So I guess what I'm trying to say is that Monday and Tuesday of this week for Apple is pretty important. It has a cycle ending, from like this place, it went down and it came back up. So that's one cycle. So that cycle from this low to this low is ending. Now what's it going to do? Well, if it does what the other things does, it's just going to keep on going down. But really, this trend line is really significant, I think. So, and we have major support right here. So it's like a wedge. The wedge is just coming down. It's like a coiled spring. It's loading up. And which way is it going to go? I don't know. But if it gets below 92, then I think it's heading down to 80. I think 81, 82. If it doesn't, if it breaks up, then it has a chance to get back up to 101 and then 105. And then, 102, 105. And so that's what Apple is. So if you put a gun, if I had to make a trade, then I'd wait till it hit 95 and I'd sell 95. Or, yep, so that's basically any time it got back up to 90, if it got back up to 96.75, I'd be selling it. I'd sell that based on that trend line. Now you want to close outside of this trend line and above 96.75 if you think it's going to go higher, back up there. I would buy that. If it closes above this or breaks above this with a lot of volume, then you can buy it thinking that it'll get up here. Or if it breaks down below this, below this green trend line with volume, then you can, short it, but don't. But a lot of times, just be careful because these trading ranges are exactly that. They've been sitting here for a month, just bouncing around, bouncing around. So just be careful. But again, that would be short. All right. So that's my technical analysis. We can look at a couple other charts, or if you guys have any questions, you can email me. Let's take a look at Celgene. All right, on Celgene, we've got some this low to this low. We have some time before the next low would show up, which is, I'm expecting the next low to be at the end of the month. Now, is it next low going to be down here? Where's it going to be? I'm not sure, but I would suspect that it's down here at 89. But for right now, it's right in the middle of that timing period. So I wouldn't make a trade on this. You see how the Bollinger Bands have come back in? So we're working up a squeeze, another volatility squeeze. We do notice that the volume is trending higher, and the volume zone oscillator is trending higher. My Eller's ruling filter is trending higher. So, people are definitely getting interested in buying this thing. So there's definitely some buying interest, but again, I can't tell you to buy it. Just it's right in the middle of this range. If it can get back up above 110, then that maybe you can buy it there. But for right now, we're playing this as here's our downtrend lines. We're playing this for if it gets up to 105.65, short it. Short it back down. If it gets down to 92.91, buy it. So that's what we're playing for, just our ranges. I'm trying to think if there's anything else. One thing that I did tell, I was talking to a friend of mine, and we looked at the bonds. The bonds have just gone crazy. And I told him, I said I would buy it, I'd buy it down here, and sure enough, it really popped. It popped really big. So now this candle, this is an exhaustion pattern. When it gets past your line that has been going, so here, this is our range, right there to there, and there to there. That's a healthy market range. Now you see how far, if you extend this line out, then it extended way up here, and look at the huge 1.2 million shares, huge volume when usual volume, is down in the 800s, 700s, huge volume day, 1.286 million shares. So that's exhaustion. Now, it has a chance to come back up here, but I'd be looking on any rallies, you might be looking to short until it gets back down to come back down to 161, 162. We had timing go off from a high to a high, and then it just exhaustion. So I would expect this to come back down, and then for people to pick it up, try to pick it back up again. But I would expect some consolidation for this week in this, unless unless oil really goes to crashes, then I would expect the interest rates to consolidate, but from the 170s down to the 163, 162 for this next couple weeks, or this next week. All right. If you guys have any questions again, let me know. Let's take a look at Disney. What's Disney doing? Disney had earnings. There. It just, man, it doesn't. it did come back. Well, we had some support right here. It's below this is an Eller's roofing filter line. It's it's staying below here. So until it gets above the roofing filter at 94.39, until this roofing filter turns back up, then this is really tough to. That's a heck of a downtrend. And if we take this, go from our high there, there's there's that line. And oftentimes, what I do is if I have a high to a high and it does that, then I'll take it. You take a pair. No, oops, wrong button. You take a parallel. So if you go from the high there, there, then you take a parallel and you draw it like that. And oftentimes the parallels will work, and if it doesn't, then you can draw it like that from this high to this high, and it comes on down. These are just how I draw trend lines. So that's and there's a million ways to do this stuff, and there's a million people out there trading. So just know that of the major things like head and shoulders, tops, and trend lines, lots and lots and lots of people are looking at those levels. All right. Well, that was it. Thank you very much for your time.